Hello, everybody. It's Rombo here, and wow, what a day today! I know it's you're most likely a lot of the stocks out there didn't do well today. It was a big red day, but you go with the flow, you go with the trend. The SPY has been going down since 479. I uh, just playing it from the weekly chart, guys. The 3-year weekly chart. It you know it the deviations here have kind of changed a little bit over time, but this was maxed out on the second deviation and never got past it. I thought for sure it would at least come down to the means, which it did. And then it retested, broke through, and then what I did is this simple, guys. I just went to the pandemic low. It broke just below the third sigma, and I drew a parallel trend line right up here. Now this green dotted line, that's part of a Bukowski trend lines, which it drew also right here. That crosses over, but I kept mine parallel to that deviation line on the way up, and I said it was going to come down to the 360 area. It did. Then these two highs right here set a trend line. You just put trend lines in, guys. And when it hit there, then I was thinking, okay, it was going to come back and test this trend. Now here's the scary part, because you had to be careful here. Big moves up. It definitely could have broken that deviation, especially if you look at it on different charts here. It got very close to breaking it, depending on the deviations on those charts here. So I just took a day off, and you let the market show you which way it's going to go. You don't have to get in right on the pivot point. Remember, the first mouse gets the trap, the second mouse gets the cheese. Okay, because if it would have broke here, we probably were looking at busting up to at least the negative half deviation at 447. But it went under, and then boom, right away, puts. Okay, and that's what I did today. Not to bore you to death or get you too involved with, these are overlays of the monthly and the daily. Here's the half candle retrace right here. And it was, it tested the 1 month and then broke. As soon as that happened, I got in puts. Now, I have, this is the, I have the 90 moving average up here, and then I also, here's the 200 EMA, and then I have the 90 SMA, and then pretty much my go-to is the 25 EMA here. So once we broke down below that and the 25 broke underneath the 200 and the 90, I'm in. Okay, and I alerted, and now the beauty of it is, a little struggle here with the +1 sigma on the weekly, but then we retested, and then we broke, and then it was just pretty much clear. Had a chance maybe at 413, but this gray area was a range here, and it just broke through. And then when it broke that range, I knew easily 409. I got the 412s puts today, and came easily down to the +1 4 hour 4 hour deviation right here. Now what's going to happen next? We don't know. But my plan, today, if I would have stayed in those, could have gotten in at I could have gotten in at 10 cents, but I waited. I got in the 412s today at 24 cents and ran it up into the threes. I was happy with that, and ended up going to $7. So could have made 7,000% on that move today. Unbelievable. Um, so, but hey, I'm not going to complain about, well over 300%. So, um, matter of fact, 900%. Sorry. um, so, what do we have going on here coming into next week? This is another major reason why I am seriously, I really think it's going to get down to the 380s. Um, we have a lot of spaghetti going on. These are the 4 hour, 180-day 4 hours. But I'm playing this from this crab pattern on the harmonics. It's based off of Fibonacci levels and certain measured moves. Now, it wasn't a perfect one, but this is the reversal area here. This pattern should have came up to here, but that's okay. It broke through, and traditionally, once it breaks through, it likes to retest that area, and then boom, and that's exactly what happened. Okay, and then it just went downhill from there, and that was today. And funny, look where it stopped, right on the target price, the number one target price. So what I think, here's the possibilities, because no one knows exactly what's going to happen. Neither do I, but this is my thinking on it. First of all, I have to move this over. There we go. Okay. So big move down. I could see us trying to come back, and then I personally think, at least in a bearish move in a bearish market, as long as we're below that downtrend line, the 10 is below the 50, as Connor Polifrone, I believe that's how he pronounces it. That's a sign that you're in a bearish market on the 180-day 30-minute chart. We did break above it for a while, and then we broke below it, and then that was the big move. But the second target usually on a bearish move like this, this harmonic pattern, it just about always hits the second target, which is 388.74. Okay, now what I did here, and why I think it's going to come down to the 380 mark, is, let me get some of this spaghetti out of the way here. Okay, I got to turn the patterns off. I don't know why I have those on anyways. There we go. So we have this move right here. Okay, this really first big move. And then what I did is I drew parallel lines. You could do parallel channel. And I moved it here, and then I drew the second one to when it first started right here. So that's parallels this move right here. And then this move right here, I paralleled down here. Okay. So that gives me a general idea. Yes, it could be steeper. It could go flat. This gives me a general idea of what I'm looking at, though. And then I come down and I want to see some concurrence. And right now is, if this comes down relatively the same amount that this did right here, and I come down to this pattern, it crosses about right here at 378.80. And what's interesting is, here's the support from the pandemic low that was drawn on my 3-year chart. Okay, this was drawn on a smaller chart also. Okay, that was parallel that deviation line. And now, of course, it's not perfect. It's not right on that support, but there's a lot of concurrence right here. Okay, and so it does break the second target, but it doesn't. I mean, the third target, guys, 353. All right, off of this pattern right here. So I think conservatively, I definitely could be wrong. It might bounce, but I'm thinking, I still think we're going to get down to around 380. And now of course, the different plays, you know, that this could retest. And here's the overall downtrend right here. So we could retest. Now this really isn't a resistance. Well, yeah, it is now. But I drew this before this move even started. Okay, and sure enough, we're following it. So now technically, it is a downtrend resistance line. It could test that. So Monday we might have a jump up, and then personally, if it bounces off that, as soon as it bounces off there, I'm gonna get puts. Now that's just me. Remember, I'm not a financial advisor. I'm just an old man in a dark room upstairs looking at 3 monitors. Okay, so but I think I'm gonna get puts again, and I'm gonna go short, and eventually, you know, I still think that we're gonna be coming down here. So that is one scenario that can happen, or you know, we could break above that, and overall, okay, we do have, believe it or not, if I pulled this over, this is a descending wedge, which is bullish. So you know, we could eventually, you know, break through this, but I think we're going to hit the support one more time, and then we'll see if we get a bullish move out of it. Oh heck, I might as well drag it over and show you here. Where's the end to this thing here? Okay, there we go. So it's slightly downtrend. Again, a descending wedge works 78% of the time. It doesn't always, so it definitely, we could still be going down. But that's what I have, and that's my plan right now. Here's the average price right here. We're just now on the daily getting down to the average price at 398. What, 398.50, and that's why a lot of people, it's just coming back to the means. So you know, round it up to 400. I know Connor's been saying that quite a bit, that you know, it's just a reversal back to the means, and then usually if it goes up to, you know, first second sigma, then it will balance itself out and come down to the first second negative sigma. All I'm thinking about is maybe by the time it gets down here, you know, this will be around the negative half deviation, you know, so because, you know, these lines extend out over time and move. So it's not that big, it's really not that big of a move, but it is. So that's what I'm looking at, guys, for the future for the SPY. That's how I played that today. The perfect trade would have been getting in at 10 cents and it went to $7. So that would have been 7,000% on the SPY option today on the 412s. So that was a heck of a move. That's how I use technical analysis to a certain extent, an idea of how and why I got into that trade today and what I was looking for, and the conviction that I had on the move. And again, Monday, we, you know, depending on what's going on pre-market, it could already be up here at 410 pre-market, and then if it breaks the 405, then you know, I think that we're definitely coming down to, you know, 388s or so, on this downward track down to the 380s right here, before we see what is going to happen next. And with that said, guys, sorry about the mumbling and bumbling, but trying to get this out as soon as possible. I've got a brisket to make for the weekend, so I hope you guys had a really good week, and have a really good weekend. Take a break from stocks, go out and enjoy the family for a little bit. And again, I made this call out this morning today. It's not like this was just me by myself, but I'm in Moon Markets Discord, and I'm live on there, and I make my call outs on there, and I called this out, I can't remember, at 9:10 in the morning, to get the 412 puts. I know quite a few people made 300-400% on there. So if you're not in there, it's a great family. We're all in it together, and a lot of people are making some good calls in the Moon Market Discord. So if you haven't tried us out yet, go ahead and give it a run. And with that said, guys, take care.